Welcome to another edition of Market Insights. This is Steve Fernandez from Smart Profits Daily. Today I'm going to walk you through the future of energy, and at the end I'm going to show you 3 ways to profit from the opportunity I'll outline for you today. Over the next 30 years, the way we power our world will change dramatically. Bloomberg estimates a 60% increase in global power consumption and a huge investment during the same time frame, somewhere in the ballpark of $30 trillion. About half of that will be towards power capacity, and the other half to the power grid. Of the power capacity investment, 11 trillion will be aimed at renewable power capacity. So there's a big focus on renewable energy sources and transferring that energy around the world effectively. Here's a chart of global power consumption back to 2000 and out to 2050. You can see a gradual increase in power consumption since 2000, and that's expected to continue over the next 30 years. Electricity will make up a big chunk of that power consumption, and that's not a surprise. Electric vehicles alone will make up 12% of electricity consumption in 2050. And electricity does not all come from the same source. Here's a chart of global electricity generation beginning in 1970 with forecasts out to 2050. You can see that coal made up about 40 to 35% of electricity generation until about 2010, where it tailed back a bit. We're expecting a huge decline in coal electricity generation over the next 30 years, and it's going to be replaced with sources like solar and wind. Now, solar and wind will make up 56% of electricity generation collectively in 2050. To put that in perspective, that's up from 9% today. So a dramatic change in the way that electricity will be generated. Of the 2 sources I just mentioned, wind will see the most growth. It's expected to reach 33% of electricity generation, up from 6% today. And solar is not too far behind, reaching 23%, up from 3% today. So this comes as no surprise to see renewable energy stocks doing so well in 2020. Investors are really buying into the opportunity for renewable energy growth. So if you look at the data, it shows that the investment thesis is very strong for these stocks. Now, that doesn't mean there's not going to be pullbacks along the way, but the long-term thesis is very strong. So we live in a cost-driven world, and that's really going to leverage renewable energy even more. So, for example, wind turbines are now 46% cheaper and 15% more efficient than they were 6 years ago, and solar is a whopping 70% cheaper than it was 5 years ago. And as these costs continue to decline, these technologies become more scalable. And what that means is there's really no argument against using these technologies. The costs are going to continue declining. We're expecting a 66% decrease in wind costs and 57% decrease in solar over the next 30 years. And it's already cheaper for solar and wind than creating new oil and gas plants in 2/3 of the world. So the argument that renewable energy is too expensive to scale, it doesn't make sense. The data doesn't support it. But here's a chart of the average cost per megawatt hour for solar and wind over the next 30 years. So you can see that solar and wind share the same trajectory, and at about 2035, solar starts to become cheaper than wind. So the rise in renewable energy will create a huge demand for battery storage. Now, a common misconception that I've heard when it comes to renewable energy is energy storage is not sufficient, or there's no way to store renewable energy. You know, there's off hours where solar can't support our energy needs, and it's not necessarily true anymore. The average cost of an energy storage system has declined dramatically since 2000, and it will continue to decline. Bloomberg expects a 44% decrease in the cost of the average energy system over the next 10 years. So this kind of nullifies the argument that it's too expensive to store renewable energy. Now, with declining costs and a $30 trillion investment over the next 30 years, the thesis for investing in renewable energy stocks is very strong. And there's 3 ways you can potentially profit from this opportunity. Now, the 3 are ETFs, and these are not the only 3 ways to profit from this opportunity. The first is iShares Global Clean Energy ETF, ICLN. The second is Invesco Solar ETF, TAN. And the third is First Trust Global Wind Energy ETF, and that's FAN. So ICLN is going to give you exposure to a global portfolio of stocks that invests in renewable energy, and they're taking part in the renewable energy shift. So this can be solar, wind, battery storage. The solar ETF, TAN, that's going to give you exposure to solar stocks. So if you're more interested in targeting that segment of renewable energy growth, then that's an interesting investment. And FAN, that's going to give you exposure to wind stocks. And wind is expected to grow the most over the next 30 years. And in my opinion, it's often the most overlooked. So that's going to conclude today's edition of Market Insights. I hope you enjoyed it. Please leave a comment and subscribe, and we'll talk to you next time.